Okay, we'll now take a look at exercise 10.1 on page 536. And you can work it along with me with the template I provided. And you want to practice it. You could see one like it on the final. You won't have you won't have a homework problem to turn in here for chapter 10. I couldn't find very many that were worked out the same ways where I could work one for you and then assign a different one. So I just thought I'd do some videos for you. You can practice these, and then you'll see some of these on your final exam, which will be posted that last week of the semester, which runs December 9th through December 15th. Okay, we're going to look here in chapter 10 at absorption costing and variable costing. Now, it refers to what's included in inventory and eventually what's included in cost of goods sold. With absorption costing, we'd include all costs, both variable and fixed. So we would include direct materials and direct labor, which of course are both variable. We'd also include any variable and or fixed overhead. And we're required to use absorption costing for financial statement purposes under generally accepted accounting principles. But in cost accounting, when helping management make a decision, sometimes we might not want to take those fixed costs into account because they're going to be present no matter which decision we make. So we're going to look at the difference here. Let's read through it first. They say Verst Products Company uses a process cost system and applies the actual factory overhead to work in process at the end of the month. The following data came from the records for March. Okay, they had direct materials of $200,000. And that amount's going to be the same both places. Okay, then they also had direct labor. Which was $100,000. Then variable factory overhead. Remember, for managerial accounting, variable costs are ones that increase as production increases. Fixed costs remain the same whether production increases or decreases. We want to pick up all of our variable costs over here. We want to pick up all four under absorption. Our variable factory overhead is $80,000. And then fixed factory overhead under absorption costing, we'd pick it up, $60,000. Under variable costing, we would not. Now, it doesn't mean it just goes away. Under variable costing, we would just deduct fixed factory overhead as one of our expenses on that year's income statement. So we end up with total cost of production. We want to total both of these columns. $440,000 under absorption costing. Only $380,000 under variable costing. All right, then number one asks, from the information presented, compute the following unit cost of production under both absorption costing and variable costing. So we'll say here unit cost. Well, now we're just going to divide equals 440,000. divided by how many units were produced. $25,000. So we get $17.60. Then we've got 380,000 divided by 25,000 units produced. Gives us $15.20 unit cost under variable costing. Again, that difference doesn't go away. It's just deducted in total for the year under variable costing. And the only part that gets deducted on the income statement under absorption costing would be the units that were actually sold. The remaining part of your fixed factory overhead under absorption costing would remain in inventory, finished goods inventory that is, if the units weren't sold at the end of the year. And that's where we're going with number 2. We want to know the cost of ending inventory under absorption costing and under variable costing. So we'll say cost of the 5,000 units in inventory. You might wonder how I got that. Well, units produced were 25,000. Units sold only 20,000. They tell us there were no beginning and ending work in process, and no beginning inventories and no ending work in process inventory. So that means we produced 25,000, only sold 20,000. We have 5,000 units in inventory at the end of the year. So we'll just say our 5,000 units times our price per unit. You get 88,000 under absorption costing as a cost assigned to the inventory. It's going to be less under variable. Because the difference being the fixed cost, excuse me, part of your fixed factory overhead costs are being carried in inventory under absorption costing, and all of the fixed factory overhead costs under variable costing are being expensed in the current year. Okay. And we'll move on. In exercise 10.2, we're going to prepare comparative income statements for March under using the same information under absorption costing and variable costing.